Hey everyone, and welcome back to Bitcoin Bulletin. Get ready, because the news cycle is absolutely on fire today, and we've got some massive updates that you absolutely do not want to miss. The markets are buzzing, and the big players are making moves. We're diving deep into a whirlwind of activity that could reshape how we see digital assets. Let's jump right in. First up, we're seeing a dramatic shift in investor sentiment. Despite the overall market turbulence, one specific digital asset is actually attracting significant new investment, even as larger players are pulling back. We'll break down exactly where that money is flowing and why it's making waves. Then, we're heading south to Brazil, where lawmakers are seriously considering a bold move that could set a precedent for nations worldwide. Imagine a country looking to bolster its reserves with a digital asset that many are still trying to understand. We've got the inside scoop on the legislation and what it could mean for the global financial landscape. We'll also uncover a corporate move that signals a growing confidence in digital assets as a treasury strategy, and explore how a major player is doubling down on its Bitcoin holdings, sending a clear message about its market outlook. And finally, we'll wrap up with a crucial look at a major Bitcoin purchase that's being hailed as a signal of institutional conviction. You won't want to miss any of this. Make sure to hit that like button, subscribe, and ring the notification bell so you never miss an update. Investor exodus as XRP ETPs see massive inflows. The financial world is witnessing a significant divergence in investor behavior, with a staggering $1.43 billion being withdrawn from digital asset investments overall, according to a recent CoinShares report. This massive outflow highlights a palpable investor anxiety, largely attributed to the ongoing concerns about further interest rate hikes by the Federal Reserve. As market participants brace for potential economic tightening, the flight to perceived safety has led to a broad-based withdrawal from various digital assets. However, amidst this widespread exodus, a surprising countertrend has emerged. XRP exchange-traded products, ETPs, have recorded substantial inflows, totaling $25 million. This influx into XRP ETPs, while a fraction of the total outflows, stands in stark contrast to the general sentiment and indicates a specific investor conviction or a strategic reallocation towards XRP, even as the broader market experiences a significant downturn. The report's findings paint a picture of a market in flux, where traditional concerns about monetary policy are driving large-scale liquidations, yet specific assets are still managing to capture investor interest, signaling a complex and bifurcated investment landscape. Analysts are closely watching to see if this trend continues, potentially indicating a shift in how investors are navigating the current macroeconomic climate, balancing fears of inflation and interest rate hikes with the allure of specific digital assets that may be perceived as undervalued or poised for future growth. The sheer scale of the overall withdrawal underscores the sensitivity of digital assets to macroeconomic pressures, but the targeted inflows into XRP ETPs suggest that not all digital assets are being treated the same by investors right now. It raises questions about the underlying factors driving this specific interest in XRP, whether it's related to ongoing legal developments, perceived undervaluation, or a broader thematic play within the digital asset space. But what does this mean for the broader market sentiment? We'll explore another nation making bold moves in the digital asset space next. Brazil explores Bitcoin strategic reserve amidst financial innovation push. Brazil's Congress is currently engaged in a critical examination of a groundbreaking proposal that could see the nation establish a Bitcoin strategic reserve. This legislative exploration, spearheaded by Federal Deputy Eros Biondini, centers on a bill that would permit the allocation of up to 5% of Brazil's substantial international reserves, currently valued at $344 billion, into Bitcoin. The initiative is reportedly inspired by similar endeavors in the United States and other countries, aiming to diversify Brazil's reserve assets, provide a hedge against currency fluctuations and geopolitical risks, and importantly, position the nation as a forward-thinking leader in digital asset innovation. The proposed framework includes stringent measures for maintaining these assets in cold storage and mandates semi-annual reporting to Congress, ensuring transparency and security. Deputy Biondini articulated the vision behind the proposal, emphasizing its role in securing economic sovereignty and aligning Brazil with global technological advancements, stating, "Brazil is always playing catch-up, but it's great to see that this time we're at the forefront." While the initial hearing did not yield a definitive consensus, the bill has successfully advanced to committee review, where it will undergo technical refinements before a potential vote in the main chamber. The proposal has garnered support from various government figures and members of the Economic Development Committee, including Deputy Luiz Felipe de Orleans e Bragança, who noted the increasing institutional adoption of Bitcoin by major banks and sovereign wealth funds, asserting, "We are not adopting anything new. Bitcoin is becoming institutionalized." Further bolstering the argument, Pedro Henrique Guerra, Chief of Staff to Brazil's Vice President Geraldo Alckmin, spoke of Bitcoin's potential as a digital equivalent of gold for the nation's financial standing, suggesting its use in treasury bonds and thematic funds for long-term infrastructure and education projects, heralding it as a revolution in our public finances. However, the proposal faces a degree of skepticism from government representatives and the central bank. Officials like Daniel Leal from the Ministry of Finance expressed reservations, not out of ideological opposition, but due to Bitcoin's current volatility, deeming it unsuitable as a reserve asset primarily tasked with ensuring financial stability. Similarly, Luis Guilherme Siciliano from the central bank echoed concerns about volatility, stating that reserve assets must provide stability as a buffer during crises. Despite these reservations, industry advocates like Bernardo Esrer of AB Crypto view the discussion itself as valuable for educating policymakers, while others, like Julia Rosen of Bitso Brazil, urge for greater urgency, warning that ignoring this trend could be a missed strategic opportunity for Brazil. It's a bold vision for Brazil's financial future. But is this digital asset adoption just a government play, or are companies also embracing it for their treasuries? We'll find out next. Digital Commodities bolsters treasury with Bitcoin acquisition under Van Crypto facility. Digital Commodities Capital Corp., OTCQB, DGCMF, has successfully concluded a significant Bitcoin purchase through its established facility with Van Crypto Tech Ltd. This strategic acquisition adds 0.317 Bitcoin to the company's treasury, bringing its total holdings to an impressive 10.88 Bitcoin. This move is part of Digital Commodities' ongoing commitment to a disciplined treasury management strategy, viewing Bitcoin as a functional store of value and a liquid cash alternative, intended to serve as a hedge against inflation and a means to maintain exposure to non-fiat assets. In exchange for the acquired Bitcoin, Digital Commodities issued 714,285 units of the company to Van Crypto. Each unit was priced at 7 cents and comprises one common share along with a common share purchase warrant. These warrants are exercisable at 10 cents per share and remain valid for a period of 2 years from the date of issuance. Furthermore, in a move to incentivize key personnel and strategic partners, the company also granted an aggregate of 4 million stock options. These options are available to certain directors, officers, and consultants, exercisable at 0.075 per common share for a term of 24 months, vesting immediately upon grant. These securities are subject to standard regulatory hold periods, including a statutory 4-month end one day hold under applicable securities laws, as well as an additional 4-month hold period mandated by Canadian securities exchange policies. The company's core mission revolves around building a differentiated capital platform focused on acquiring and utilizing Bitcoin and gold as robust stores of value, guided by a sound money philosophy and a commitment to long-term value creation. This latest acquisition underscores their strategy of actively managing a hard, non-fiat asset base with transparency and discipline. The decision to increase Bitcoin holdings aligns with the broader trend of institutional adoption, where companies are increasingly recognizing the strategic benefits of incorporating digital assets into their financial frameworks. This is not merely about speculation. It's about a fundamental shift in how companies perceive and manage financial risk and opportunity in an evolving economic landscape. The company's forward-looking statements indicate a belief that this strategy provides a strategic advantage in navigating market conditions and executing its capital strategy effectively. By holding Bitcoin as a liquid cash alternative, Digital Commodities aims to create shareholder value through prudent and innovative treasury management, positioning itself as a participant in the growing digital asset economy. This company is clearly building its digital asset reserves. But what about the big picture? Are these individual corporate moves signaling broader institutional confidence? We look at that next. Strategy's $357 million Bitcoin purchase signals strong institutional confidence and undervaluation. A significant strategic move by a major entity has sent ripples through the financial markets, as Strategy reportedly executed a substantial Bitcoin purchase valued at $357 million. This considerable investment is being widely interpreted as a powerful signal of institutional confidence in Bitcoin's long-term value proposition, and a strong indication that the asset is currently undervalued by the broader market. In an environment where macroeconomic uncertainty and regulatory scrutiny often dictate investor sentiment, such a large-scale commitment from a major player underscores a growing conviction in Bitcoin's potential as a store of value and a hedge against traditional financial system risks. The timing of this purchase is particularly noteworthy, occurring amidst broader market volatility and outflows from other digital asset classes, as detailed in previous reports. This suggests a strategic, conviction-driven decision rather than a speculative play, positioning the acquiring entity to benefit from potential future appreciation. Analysts are highlighting this move as evidence of the increasing institutionalization of Bitcoin, moving beyond early adoption phases into a more mature integration within corporate treasury strategies. The sheer scale of the $357 million buy-in signifies a substantial allocation of capital, indicating that institutional investors are not only participating in the digital asset market, but are actively seeking to increase their exposure through significant, strategic acquisitions. This is seen as a validation of Bitcoin's resilience and its growing acceptance as a legitimate financial asset class. The market's reaction to this news is expected to be significant, potentially influencing other institutional investors to reconsider their own allocations and strategies. It suggests a growing consensus among sophisticated market participants that Bitcoin represents a compelling investment opportunity, particularly when viewed through the lens of long-term value preservation and potential growth. The narrative that Bitcoin is an inflation hedge and a digital gold alternative gains further traction with such high-profile acquisitions. This event could mark a turning point, reinforcing the idea that major financial institutions are increasingly comfortable holding and transacting with Bitcoin, viewing it not just as a speculative asset, but as a fundamental component of a diversified investment portfolio. The underlying rationale likely includes a belief that Bitcoin's scarcity, decentralized nature, and growing network effects provide a unique advantage in the current global economic climate. This large purchase acts as a powerful endorsement, potentially attracting further capital and solidifying Bitcoin's position in the institutional finance landscape. This massive buy is certainly a bullish signal. But what does it all mean for the average investor and the market as a whole? Let's wrap it all up. And that's a wrap on today's explosive Bitcoin Bulletin. We saw XRP ETPs attract $25 million amidst a massive $1.43 billion digital asset exodus. Brazil is exploring a Bitcoin strategic reserve. Digital Commodities boosted its holdings to 10.88 Bitcoin, and a massive $357 million Bitcoin buy signals serious institutional confidence. Don't miss out on any of these critical updates. Hit that like button, subscribe to Bitcoin Bulletin for all your crypto news, and ring that notification bell so you're always in the loop. Follow us on all social media platforms to join the conversation. We'll see you next time.